We're going to talk about liquidity and specifically focusing on Japan. Japan is at a superbly interesting juncture because the real venture capital and startup boom really got going, about 10 years ago. With the Abe administration, I think in 2013, 2014, and 2015, record number of funds raised, the whole startup ecosystem really getting going. What's the state right now that all these funds raised 10 years ago are about to hit their expiry? Jordan?
So they're facing maturity and just figuring out what to do about it.
So what are they doing about it? What does... Like in all seriousness, this is very exciting because any ecosystem is only as strong as it can survive and adapt in a downturn. And for all intents and purposes, we are sort of crash testing the Japanese VC ecosystem right now. What's it look like on the ground?
Yeah, so maybe I'll just throw a couple points in there as context to frame the rest of the conversation. So as you mentioned, like 2012, there was almost no VC in Japan. And so 2013, 2014, 2015 was the big ramp up, and that's where the numbers just earlier as well were cited that we had a 10x growth in VC over a decade, and then the 5-year startup plan to 10x it again, right? And so that's one piece where now these funds are facing maturity. It's been 10 or it's been 10 plus 2, and there aren't many liquidity options. IPO has been the common path for most companies in Japan. 100 companies go public a year, average market cap less than $100 million, and most of these companies don't go on to change the world, right? The last few years, topics up 50%, small cap down 50%. And these people who are buying on these small IPOs are not necessarily doing well over a long period of time. As part of the 5-year startup plan, there's been a bit of a push for unicorns, right? How do we go from, say, 10 to 100 unicorns, right? How can we become the largest startup hub in Asia? And from my experience, the muscles that you need as an organization to go public at a very small valuation are very different from the muscles that you need to continue to go after massive growth. And unfortunately, if funds have a 10-year maturity and they're investing in you in year 3 or 4, and you reach your Series A, which we just learned is taking longer and longer, and then, it's year 7, you have a mandate to do your best, dorukugimu, to go public before the fund maturity, which means that you're starting the IPO process around your Series A with maybe $1 million in revenue, and you're going to go public maybe around $10 million of revenue, and you're going to have de-risked into that IPO. And even if the founders think they're going to go back to growth after that, it's the organizational muscles are completely different. And so the small IPO is not a great path. However, if now there's a trend for companies to have pressure to go public later and later, that's going to mean there's going to be even more liquidity problems, and we need the alternative infrastructure for the small IPO. M&A, do you really want to, in the States, ex-Google employees getting bought by Google culturally makes sense. In Japan, you don't have the decacorns, the major startup cultural companies that would make sense to acquire and take advantage of these assets in the same way. And so secondary markets are starting to become part of the lingo. I think a couple years ago, if I said secondaries, most people in Japan wouldn't know what I'm talking about, maybe secondhand clothing. And now, pretty much every VC I talk to, it's like they're very well aware of the pain. They're facing it themselves. Everybody has liquidity needs. But by my estimations, there's only maybe a couple $100 million of secondary liquidity for about a couple $1 billion of secondary demand. And it's only set to grow as over the last decade we've had larger and larger funds.
I mean, it's my experience. I mean, I'm an advisor to 2 of the VC funds here, and we had to do an extension, and it took 18 months to negotiate the extension because the domestic investors, right, which thank God they're now part of the ecosystem, which 10, 12 years ago was not the function, they refused to sign because no, it's a 10-year contract. What's your experience?
Yeah, I mean, nobody wants to write things down, right? And I think part of the problem is that you have to face the reality at some point of where valuations are. And if you invested at the top and things aren't there, and I mean, there's this concept I was hearing talking about earlier is like DPI is the new IRR, right? So instead of just looking at okay, what's
Speak
your
English?
So instead of what are your returns on paper, how much cash is actually getting returned to investors, right? And that's the liquidity, and that's the lubricant that makes the whole ecosystem work and grow. And if that cash is getting redistributed back to founders, early employees, angel investors, early investors, then that also kind of triggers this power shift from maybe the old school capital and the investors to the new people who are building the future of the economy in Japan. So I do think that yeah, fund maturities are a reality. In the States, the secondary markets is estimated over $100 billion. Whereas I just mentioned that in Japan, we're maybe a couple $100 million. And yes, we're a burgeoning ecosystem, but supply and demand imbalance is very real. And there isn't that much of kind of the global best practice. So as we have more and more, like a fast-growing market, there's going to be other inefficiencies that grow like this. And yeah.
Now, Ria, as a GP, you know, raising funds, investing, how do you look at the current state of liquidity in Japan?
Yes, I mostly agree with Jordan on the point that small IPOs have really had, you know, provided the liquidity for startups, but also had a lot of negative impacts on the economy in Japan as a whole. I think one of the reasons is that obviously when you go small, Japan doesn't have a lot of small institutional investors, so big institutional investors look for certain valuation and certain trading volume, so they're not gonna buy your equity, so you have to rely on retail investors. And having retail investors it's not a great thing for founders. Your long-term strategy, they often don't understand, so you have to kind of like give the short-term results. So I really think that really kind of caps the growth of the startups. And the other thing I feel in Japan is that this is not just startup problem, but even in traditional sectors, there are too many small, medium companies that are competing against each other, providing the same product and services, and that results in smaller margins. And you know, just now the government wants more global startups to come from Japan, but for startup to go global, you have to first monopolize the domestic market, potentially raise your margin, so that with your stability and your resources, you can go global. So that small IPO has really made it difficult for Japanese startups to go global, and that had negative impact on the Japanese economy as a whole. So that I find that quite a big issue here, and yeah.
Just to put some meat around this, because this is absolutely fascinating. Japan is hyper competitive, right? There is, when you look at the industry verticals from hairdresser to chip making, right? In the average vertical, the top 4 companies in Japan control 12% of revenues in that vertical. In the United States, it's now 35% of the vertical revenues. There's been a lot of roll-ups. America is oligopolistic. You've got the moat, right, that companies have built. Here, it's a red ocean of excessive competition. And it's exciting. My family office, the best performing fund that we invest in is a fund that shorts all Japanese IPOs 20 days after listing. Because, it looks, whoa, and then it just, no, it doesn't find a bottom. It's money, it's a shame, and it's bad for capital markets. It's bad for the economy. You're a CEO. Talk to me a little bit about the temptation of doing an IPO. What?
Hi, my name is Sam. I'm the chief executive and founder of Habitat.
You don't need an introduction. Everybody knows.
Introduction. But so just a small anecdote, right? During fundraising, we just raised our Series A, which yes, was harder and longer. The biggest question everybody asks is like, "What's your plan for IPO?" And I'm like, "I got none." And so that was sort of generated like the blank stare and this, sucking of the teeth. Like, what do you mean? It's like, well, actually, IPOing in Japan is not really such a great outcome for an entrepreneur, especially if you do it too early in the cycle. And there's plenty of evidence that people do so. However, having been in other markets, particularly, I've been an investor for over a decade in Europe and North America, and an entrepreneur in Singapore, where exited in 2021. The peak time, right? Now, Japan has a very, very particular capital markets for entrepreneurs because of very, very few options. And there are very few options for exit. Things are improving, but it seems like there's a real value that the average entrepreneur here places on IPO, almost like psychologically, emotionally, there's a drive towards IPO. The M&A market, which I actually really value, it's been fantastic for us outside of Japan. I think that's an area that it's an area that needs to grow, needs to develop further, both domestically and through foreign funds that are actually really now structurally looking at Japan differently, right? So my experience, particularly in raising capital as a Japanese startup and looking at the combination of local versus global investors, finally, over the last couple of years, Japan has gotten onto the, I guess, the roadshow of some of the largest global funds. Prior to that was like, well, yes, Southeast Asia, ex-China, ex-Japan. That was like classic, right? So things are improving, but the short version is that Japan still has a very emerging ecosystem. And you see this as a function of the demand side, the typology and the sheer number of entrepreneurs. Well, not so much, given the size of the economy and the size of the opportunities, and the size of the supply from a capital perspective is also still very small. So it's an emerging ecosystem. We need more capital across all the cycle, but particularly in growth stage, basically post-Series A, and ideally coming from institutional investors, private equity firm. Secondary markets, you're right. I have never heard anyone here talking about secondaries. So what is that? I think they're
it's a clothing business.
It is certainly a clothing business. That, I think, needs to be part of the vocabulary, right? Both for entrepreneurs and for investors. And there's also, outside of Japan, it's very common for startups to actually do roll-up without startups, right? So this is a second, third, fourth generation of entrepreneurs. They actually exit. Maybe the first exit isn't so great, but the second and the third is definitely better. So this evolution of, if you like, the landscape through the eyes of entrepreneurs just hasn't quite evolved here. So a lot more growth opportunities across all sectors.
I mean, just again, to give some numbers to the whole thing. I mean, in Japan, give or take, over the last 5 years, you've got 83% of all exits being IPO. The rest is some M&A that's going on. In the United States, just as comparison, it's exactly the other way around. You've got more than 80%, which is merger, and the rest is IPO. The second big difference is that of an IPO in Japan, basically 78% of the initial investor uptake is individual, is Mr. and Mrs. Watanabe. It's not institutional. In the United States, again, you've got basically 85% of the uptake being institutional investors here, right?
And they're choosing the stocks on the basis of how good the cookies are at the annual.
How good the cookies are.
Right,
cookies are very important.
Very important you have good cookies at the AGM.
And he's not talking about the digital cookies.
No.
Right? We're talking physical stuff that you can eat, right? It's called omotenashi, right? Now, Russell, you're the exception. Russell, the founder of Paydi, the payments firm, and that still, to date, is the single largest M&A acquisition, M&A exit here. Talk a little bit about your journey and how you were thinking about it.
Sure. Although I do want to say, I think we need all of these pieces, just so that, we're not shitting on IPO, you need all of these things together. It's just this idea that the mix of tools at everyone's disposal or, components of the ecosystem. I think what everybody here says is true, but, all of these things need to be there. So our journey, we raised a reasonably large amount of capital over time. It was more than 300 million US in equity across 4 main rounds. We were pursuing an IPO path. I think that this is why you need to kind of have all of these things at your disposal, because it becomes a forcing function on the different things. But we were not culturally fixated on being public market chacho or kaicho, and not everybody is. I mean, I think again, if you look in Japan, there are some success, or there are people that have done the other model, right? The founder of Mercari sold his first startup to Zynga. That created a little bit of mental space, and then he obviously went and had a huge success with Mercari, which did go public and is obviously a multi-billion-dollar company. But anyway, our experience was basically, as Sam says, all of the sort of Series C, Series D were offshore investors, which, by the way, is great. I mean, I keep telling entrepreneurs in Japan, in fact, Sam was one of them, although as experienced as she is, there is a benefit for all of us in Japan, which is it isn't like from a sovereign risk perspective, people don't worry about it, right? If we were doing startups in other places, whatever, choose some place less stable than here. I'll let you choose. I won't choose for you. The sovereign risk.
America.
Well, there you go. Not anymore. So, Trump. So basically, that being said, the sovereign piece is not a big deal. And in my experience building Paydi was this kind of accepted business model. It's a BNPL player. So it's like Afterpay or Klarna. It obviously has some very particular nuances to Japan, which were valued in the acquisition process, but in essence, it was a proven business model. So we were able to raise money from global investors, especially at the growth phase, who were already huge investors in Klarna, in Afterpay, in whatever, XYZ. So they really understood the business model. And then they said, okay, well, Japan is great, from a stability and rule of law perspective, still a big place. So the sovereign piece wasn't an issue. And then all they're betting on is the execution capabilities of the team, which obviously in the later stage is really proven. But this is also really true for early stage stuff. Like if you are doing something, you can see, right, in AI, whatever, all of these big thematics that people already are doing. And then if there are other places that are kind of less investable than they were, China, then basically there's capital to be put to work that I think entrepreneurs here can leverage if they do this kind of thing. And look, for us, we always needed capital because we run a balance sheet business. So we weren't raising equity to buy Facebook ads. We were raising hundreds of millions of dollars to pledge against billions of dollars of credit lines to do multiple billions of dollars in volume and all this other good stuff. So that was our journey. And it culminated with a trade sale to PayPal that we were very happy to do. As Jesper says, it was 2.7 billion US, so far the highest for a venture M&A exit in Japan. I'm sure it will be surpassed by someone somewhere. If not for greater growth than just for debasement of dollars. But anyway, that's a whole other story. And look, we were really happy to do it. It made sense, for our business to be part of a bigger platform, all of that other stuff. And our investors understood it as well. So, but if the IPO path had not been there, I think this is the point that I really want to make. Sorry, it's taking me so long to get there. If you don't have this alternative of the IPO path to force this action, then likely acquirers may not be there. And maybe the thing that's missing on the Japanese side is big Japanese companies should be going and buying startups, but maybe they feel culturally they can't. And then if they go public so early, it's so mendokusai to try and do a tender offer for something that's public versus even for the same economics, trying to go and take it while it's still private. So I think to your point about ex-Googlers coming back, like somehow that little piece is also missing, if that makes sense.
Maybe just the good news on this, though, is that at least Japan, compared to, say, the rest of Southeast Asia, has the wherewithal in terms of corporate depth and strength of balance sheets of corporations to be able to go and buy. So it's not a question of capability, it's a question of willingness to do so.
But I think it's willingness on both sides, too. Like there's no one, like, don't you think? Like, people should be more excited, or well, maybe they shouldn't. Anyway, I don't want to judge.
Did you have any bids from Japanese companies to buy you?
So actually, there were through the life of the company, there were sort of 4 or 5 different discussions that we had with different people at different stages.
Right.
So and in some, like, honestly, the valuations were, it really did kind of progress. So there were some that were double digits, some that were triple digits, and then obviously the final one that was 4 digits in millions. So, but it was really clear that it was this lucky confluence of need and volition on both sides. But there were people you talked to, but they don't have the same facility doing this as Americans do, right?
So what's exciting, if you look at the Japan Venture Capital Association, you find that 2/3 of the members are corporate VCs. And if you are a skeptic, you say, well, what these guys do is they do acquire and kill, rather than acquire and grow. Because, for a company like Hitachi, they've got, thank you very much, their own R&D. Sorry, anybody here from Hitachi? No, that's okay. I'm short.
I think they're a sponsor.
Sponsoring.
Maybe not next year now,
shall
Jesper. Maybe
immediately
not
pivot.
next year.
Who's
Cancel.
Peter? Who is not?
We're cancelled right now.
No, but like, look, but this is very seriously. I mean, the innovation ecosystem in Japan has functioned perfectly well, for the last 70 years, right? Now, there are other innovation and ecosystems, that, facilitate and accelerate and allow a different scale. Which is the whole venture capital, innovation system. But for a corporation to actually buy not just technology, but also the corporate culture of a startup, that's something that for a very proud legacy Kadan and company is just not in their DNA.
Yeah.
Microsoft may be able to grow by acquiring AI companies and adopt part of that corporate culture, but in Japan, really, you look at this space. Where are the opportunities?
Yeah, so I think talking about liquidity, the biggest opportunity in the, I'm being optimistic here, is that still the corporates have about 2.5 trillion US dollars cash, so they're sitting on a lot of cash which could be deployed. And so we do activist investment in public equity in Japan as well. So there's a lot of pressure from the investors to deploy this money more efficiently. So they're thinking in different ways. And with, aging population and more higher labor costs, they need to somehow increase productivity. So I think that's how a lot of corporates started to do. There's a trend of corporate venture capital where they're kind of trying now to buy some technology, but I think there's not so much you can do when you just take minority share. And also it's not great for the startups because, startups can increase their market size when they disrupt. If Uber was providing a software for taxis, they wouldn't have been this valuation. But just because they are disrupting the traditional industries, they can have such a huge tap the total market size. So that corporate kind of pressure is also negative. But at the same time, there's so much capital sitting in the corporates which could be utilized. And I think I'm quite optimistic that there is going to be a bit more shift on the M&As from CVCs, because I think corporates are starting to realize that just taking minority doesn't really help with their productivity. Also, it's very difficult to achieve both return and the strategic angle, because their strategy changed every 3 to 5 years. Early stage startups pivot many times, so it doesn't really match. So I think there's going to be a lot more M&As happening from corporates, which could provide liquidity to startups. And it might not be the best solution, but the founders can try again. And the other thing that's very important, what liquidity provides, is that I think the founders who exit and cash out, they can create more dynamic angel investor ecosystem, which is lacking in Japan. So I do think I'm quite optimistic that there's still a lot of cash sitting in the corporates that could be utilized in a better way in the future. Just
as a thought, I wonder if this also changes where, if, as we heard from Mehdi as well, if there's more of an emphasis on, deep tech or drug discovery, things that are not, not SaaS, not consumer products, where it's less of an issue from an acquisition standpoint that you need to, onboard all of these people with a different culture. And if you're really going, and it's more like, patent acquisition or just there may be more of that. And I think big Japanese corporates may be more comfortable to say, okay, we're obtaining this IP, not necessarily we have all of these, people that are so different from our existing corporate culture. Anyway, just, do you think it may change it a little, maybe, right?
With that, and as some of you know, I'm on the board of OIS, the Okinawa Institute for Science and Technology, and this attitude, right, of deep tech, right, and deep talk, long duration funding, 15-year funding rather than 10-year funding, because yes, if you start from a scientific discovery to actually, proof of concept, commercialization, et cetera, is going to take much, much longer. The amazing thing is there's lots of money available for that. Right? So then that's where the trading companies, that's where even the Japanese trust banks and the insurance companies, they actually are very long-winded. So patient capital is actually available, but it's not being tapped. And that ecosystem is starting to be developed now. Jordan, I have a question. No, you have something that you wanted to say.
I had 2 points. One was actually to contradict a little bit on the competition, where I have a different view. But before that, I want to clarify one thing about liquidity. and the topic of this. I think we talked about it being Miss Watanabe buying the IPOs. Russell mentioned kind of having a dual track, IPO versus M&A options. We talked about secondary markets. From what I've seen, it's around $500 million market cap, where it starts to become interesting and relevant for institutional investors. So institutional investors will usually need to be able to sell a certain position within a certain period, and that's why it needs to be of that size. And so I think that's almost, it's like close to unicorn size in US. And so I think targeting more unicorns, I think makes a lot of sense, aligning with trying to get more institutional investors interested in Japanese equities and growth and actually things coming out of that. The point that I wanted to make around competition stems from that, which is that I don't think Japanese startups are generally targeting large enough things, so they never actually threaten the large established players. And in the States, if I'm going to be starting a company, there's going to be 10 other teams, all really talented serial entrepreneurs going after the exact same thing with a lot of capital. And so the hit ratio is much lower, right? Everyone thinks they have a shot on goal, but you're going after a much larger prize. Whereas in Japan, most companies don't actually fail. Maybe become zombies, but relatively, you can continue to grind it out and maybe eventually make it to a small, IPO or something like that over many, many years. So I actually think there's not enough competition in the startup ecosystem in Japan. And some of that is not necessarily just because we're competing on margins, but actually via real innovation and trying to make things 10 times better and trying to do things. When there's more competition, you're forced to go after more ambitious, more riskier methods. And then if you're going to have companies that actually become a decacorn, dare say, or a $10 billion company or something that could then really make a dent in a large company, they're going to have real pressure to not just be like, okay, we're kind of invested, we kind of see this all, be like, oh, there's actually someone threatening our business. And I think that will be a much more real catalyst for change.
I'm going to say something here that I apologize if this doesn't sound so culturally sort of sensitive, but Japan is really made for the grind, and you see this at every level. I was really shocked to see and speak to entrepreneurs that have been doing more or less the same thing for 15 years, more or less with the same sort of level of growth and sort of KPIs. And so this one is very specific, I think, also to the mindset. It's not necessarily it's not necessarily a merit judgment on this approach, but I'm saying it's distinctly Japanese. This wouldn't happen elsewhere. The investors wouldn't have that kind of patience. The entrepreneurs would not have that kind of patience. And probably even the consumers won't have that kind of patience. So this is true also for capital, right? So it kind of translates, and it also I'm saying something everybody knows, right? It takes longer here to do everything, and it translates in every single aspect, even the time that it takes to a startup to get to a reasonable level of KPIs.
So just to add some numbers to this, right? Japan's productivity is basically running at about half of the United States of America. And if you actually just do the econometrics, you figure out the reason is not lack of entry. It's not lack of startups. It's not lack of entrepreneurship. The reason is lack of exit. Japanese companies don't die. 12% of Japan's listed company, these are the greedy guys, right? 12% of Japan's listed companies over the last 5 years have not been able to cover their interest expense, which, given that interest rates are zero, is actually very difficult to do. So again, where does this red ocean of excessive competition come from is because of what I call financial socialism. Do you know that 2/3 of all Japan's commercial loans are guaranteed by you, the Japanese taxpayer? 2/3. That's better than East Germany, right? In its heydays. Now, the exciting thing is that this financial socialism is being withdrawn. Thank you, the Bank of Japan is increasing interest rates. But more importantly, in the December board decision, the Bank of Japan decided to stop its lending program. The Bank of Japan has about 77 trillion yen. This is a 600 trillion yen economy. 77 trillion yen of loans are done, of commercial loans are done by the Bank of Japan. This will roll off. The average duration of that loan is 2.5 years. So now the zombies will die. And this is great news for you in this space, because number one, you can actually go the other way around. You can be the startup that actually now can acquire a Japanese company and take part of their workforce, take part of their supplier network, et cetera, et cetera. So that, I think, is the exciting part. Now, tell me one thing, and this is, I don't know, this is to all of you. Are Japanese founders too proud? Because, all they want to do is, do the IPO and sail into the sunset as kaicho when they're 92.
So I was at a party a couple of weeks ago with about
Where
12...
the party?
A great party. A dozen,
It
12...
was sponsored by Hitachi.
No.
Best party ever.
Thank you,
Best
Hitachi.
party.
It was
Thank you,
sponsored by
Hitachi.
12 founders that went public in the last year. 12. And it was a small group of other founders. I looked afterwards, and most of these companies have been public for around a year on average now. Average market cap was around $30 million. Right? And so I'm talking to these founders and trying to understand, and they're sharing different perspectives. And I do think the reality right now is that a listed company CEO, the status of that, is far above the concept of some unicorn founder or decacorn founder, right? Like that status, and I think if you look back to maybe a decade ago when many of these companies were started, Japan was, in some ways, people go after status. You lurk at the largest possible companies because that gives you social credibility, and you can marry somebody like, oh, yes, you work at a large company. You must be a credible person. And the rare people who went the entrepreneur path, maybe because they couldn't get into large companies or because, weird or cool or whatever reason it was, the path to social kind of credibility was going public. Yep. And that's what, if you have 100 companies go public a year, that's the path. That's what all the senpais have done. Everybody who's out in drinking in Gins every night, like if you want liquidity personally, if you want to do right by your shareholders, if you want to do right by society, that was seen as the kind of success metric and the goal. And unfortunately, that is a goal that becomes optimized for. And so I think building that alternative track to the small IPO, how we can lift up and actually say it's cooler to do something bigger. It's actually in Japan's best interest. And how we can kind of lift those people more on a pedestal and create more role models, people like Russell and others, that's our biggest challenge.
And that's where the cool stuff happens. You've heard me say this before. Over the last 8 years, 1 in 4 young men and women who join the Ministry of Finance and the Ministry of the Economy, 1 in 4 leaves within the first 8 years of being at the elite, high status, very good status. And of those people leaving the elite bureaucracy, you actually find that 3/4 of them go to startups. And when you talk to them, it's very interesting. You say, oh, it's risk management. Because if it works, I'm good. If it doesn't work, within 3 hours, Hitachi will offer me a job.
Capitalism is great in this sense, and I think talent as the leading indicator of where the ecosystem is going is what I'm most excited about. It's just how do we now provide this alternative path to the FPO? Sorry, I don't call it an IPO. It's a final public offering because there's no liquidity for these companies afterwards. That's, I think, what we all need to, collectively build.
Just to jump, but I think you have to have some sympathy, right? Entrepreneurship is such a personal journey. And, people have to respond, or people naturally do respond to what are their own motivations and incentives and whatever. And Jordan, you make a good point. Over time, this does change, and obviously there's the different cultural norms that are around. And it may have been, historically, like when I started being an entrepreneur in Japan, it was almost 20 years ago now, there were very few people that really wanted to do it. So you could see that they really had to challenge the status quo to do it. So I can understand why they really wanted that brass ring at the end. But there's so I guess my point is I don't want us to come across as too judgy. Like obviously everybody has their own. Yeah,
to your point, no, it's about having options, right? And all these people worked so hard to get to where they did. And they should be incredibly proud of what they accomplished. And I don't mean to diminish that in the least. Just there isn't an alternative path. And several of those were like, if there was a path to take more capital, if I understood how other capital markets worked outside of Japan and how other founders work, if I had that field of view, like that's, I think, just having those multiple paths and multiple different types of role models.
I think diversity of models that are perceived to be successful, desirable, I think it's very, very important, right? So, and I think we've seen this certainly outside of Japan, and in terms of also the diversity, the composition of the, typical startup founders, right? From people straight out of college to being maybe a little bit more mature, to be maybe even more mature, mother of 2, right? It's like, so there's different models, right? Around how you can build alternative paths that resonate to different audience. And I think that's really important, right? I mean, if you think about the ecosystem, and this I think Russell really has a point. that the maturity of the ecosystem is not just a function of how many exit paths you go and how much liquidity, but also how much diversity within the ecosystem and the options that are given to people that have different preferences, right? So I think that is a little bit missing yet here in Japan. When you look at the DNA of the typical founder, they still kind of tend to look a little bit more like the same. And I mean, I raise sort of the diversity card for a reason, but this is not just about being a woman and being an entrepreneur. It's also perhaps being, a foreigner and not speaking Japanese and actually being a mother and being able to try and sort of cope with, family and business at the same time. So building models that actual real people can relate to.
Yeah. I wanted to point that out that, I think on the culture part, it's in terms of that exit market, it's important to give options, but on the culture part, it's very important to have more, non-Japanese, different, founders with different diverse backgrounds. Because I think Japan does have this closed culture that is kind of, everybody has a bit more conservative and kind of, opinion that everyone agrees to. So I think having that diverse founders will change the culture. And I'm so proud that I'm the only Japanese here today. I deeply respect, you guys.
Not based in Japan, though.
But I think this is what we need in that, not just on the founder side, but on the investor side that provides different opinions and diverse options for founders. So, yeah.
Well, which is why this forum is so good. So thank you to our
Thank you to
sponsor,
Hitachi.
Hitachi, yes.
We didn't talk about something. We're running a little bit out of time, and I want to do one lightning round and put you on the test here. But one thing that is also very noteworthy is over the last 18 months, you've seen a very, very positive evolution of debt financing for startups, which basically, again, 5 years ago was not possible for all intents and purposes. But you've got even the big money center banks, now actually being capable and willing to actually provide loans, debt finance to startups. So that's a very healthy indicator that the ecosystem is being crash tested. There are many new tests that are coming through here, but actually the evolution is positive because it's not just equity. Now there's actually debt finance that is also available. Quick lightning round. You've got exactly 5 seconds to answer. If you answer more than 5 seconds, it's a bottle of champagne for everybody in the audience. Everybody at Hitachi. One piece of advice to either an investor, a startup, or the Japanese government. What should they do to make the ecosystem better?
Replace any statement of IPO as a goal with make $100 million in revenue first and then think about anything else.
Revenues, not IPO. Ria.
And to your point, let zombie companies die. That will create more companies to come up.
I love it. You kill the zombies. We love it. Okay, so we shall increase interest rates. Russell.
For all of those constituents, growth solves all problems.
Growth solves all problems.
Make English a common entry exam for everybody going to university. I think that would help a lot for founders.
By the way, it's very interesting on the English language side, right? There's a lot about, startups, your market is global, you got to be global right away, so you got to obviously speak English, right? Not German. But, but this is actually also very, very important for the GPs and for the LPs. Because, if you're a Japanese investor and you don't speak English, to Russell's point earlier, how can you do the comparison? Right, to what goes on in the United States, in Europe, in Israel, right? And the quality of, unfortunately, and I'm allowed to say this, the quality of the Japanese investment community, of the asset management community, is still terrifying, because they barely know where Osaka is. Except, of course, the people at Hitachi. Thank you very much. It's been exciting. I hope you enjoyed it. And I think everybody is contactable. Thank you very much.